Welcome to The Explainer. So today we're digging into Robert Kiyosaki's Rich Dad philosophy to answer one big question. Why do the rich invest so differently from everyone else? And the answer? Well, it isn't just about having more money. It's about playing a completely different game. And it all starts with a really simple but powerful number that pretty much defines the entire world of investing, the 90-10 rule. And this isn't just some catchy phrase. It's a serious reality check about where wealth truly lies. Now, this isn't an opinion. This is a hard fact from the Wall Street Journal. Just let that sink in for a second. It shows this massive imbalance in the financial world, where the overwhelming majority of investment wealth is held by a tiny, tiny fraction of the population. This is the 90-10 reality we are all living in.
So the real question is, how do you get on the right side of that number? Well, the Rich Dad philosophy argues it's not about getting hot stock tips or making risky bets. The secret? It lies in rewiring the one asset you have total control over, your own mind.
Okay, let's dive into this, because this really is the starting point. The single biggest difference between an average investor and a rich one isn't what's sitting in their bank account. It's their mental approach to money, to risk, and to wealth itself. I mean, it's like they're looking at two completely different worlds. The average investor, they're focused on security, right? Trading their time for money, and they see risk absolutely everywhere. But the rich investor, they're focused on creating assets, on making their money work for them. And they understand the real risk isn't the market, it's a lack of financial education.
And this quote just brilliantly illustrates that core idea. It's all about seeing the whole picture. Where one person sees only the risk of losing their money, another person sees the potential for gain, they see the tax advantages, and they see the opportunity to learn, all on the other side of that exact same coin.
Our mindset is so often revealed by the words we use. These phrases, which we often inherit from our upbringing, they create a kind of self-fulfilling prophecy. They aren't just words. They're the mental barriers that stop people from even starting the journey to wealth. So if mindset is the first step, what comes next? Well, you have to understand the different levels of the game. See, the financial world, it's not a level playing field. There's a very distinct ladder that investors climb. Officially, the government creates a line in the sand with something called the Accredited Investor Rule. It's designed to protect people from what are considered risky investments. Things like private placements or pre-IPOs, the very deals that are often available to the wealthy. But just look at the impact of that. This one rule legally bars 97% of the population from even seeing some of the best investment opportunities out there. It basically keeps the vast majority on the outside looking in. But the Rich Dad philosophy argues the real ladder isn't just about money. It's about knowledge and control. You start as an average investor, often just relying on hope. Then maybe become a qualified investor, analyzing assets from the outside. But the ultimate goal, it's to become a sophisticated investor, the one who's on the inside, building and controlling the entire business system. Now, this might be one of the most important quotes in the whole philosophy. For the sophisticated investor, investing is not about the adrenaline rush of the stock market. It's about methodically executing a well-designed plan, day in and day out. It's a process, not a lottery ticket. And that brings us to the crucial point here. While most people are focused on finding a great product to buy, the truly wealthy are focused on building a great system to own. The system is always, always more important than the product. Think about it like this. McDonald's isn't successful because they have the world's best hamburger. Of course not. They're successful because they have one of the world's best business systems. That's the shift in thinking. The product is almost secondary.
And this whole concept is visualized in what's called the BI triangle. It's like a blueprint for a successful business. It shows that a business isn't just one single thing, but an integrated system. Its strength comes from how all the parts, from cash flow and communications to leadership and its core mission, how they all work together seamlessly to create this powerful wealth-generating asset. This really turns conventional wisdom on its head. The mindset we learn in school, to do everything on our own, is the exact opposite of what you need to build a successful business. You don't have to be the smartest person in the room, you just need to build the smartest team. So ultimately, everything we've talked about, the mindset, the investor levels, building systems, it all funnels down into one critical document, your financial plan. This isn't about a single transaction. It's about building a lifelong process.
Your financial plan is like a living document that guides you. It's the roadmap that you're constantly refining as you learn and grow, charting the path from where you are right now to where you want to be.
So, if we put it all together, what we have is a completely new framework for investing. It shifts the focus away from hunting for hot stocks and moves it toward a much more durable strategy. Understanding that 90-10 rule, mastering your own mindset, building systems, and executing a concrete plan. And that leads us to the final, really provocative question that the Rich Dad philosophy leaves us with. Are you building a plan to be secure, or are you building a plan to be rich? Because they are two very different goals and they require two very different plans. The choice of which path to follow, well, that's entirely up to you.